In essence, we are trading foreign currency. Depending on the strategy you are using as your main strategy, you will determine whether or not the currency pair will trade up or down, and then you trade accordingly. There is no physical exchange of money. You open up an account with a broker and make a deposit to their account. They handle all the nitty-gritty, so you don't need to deal with all the actual part of trading, the transferring of currency. Think of trading as a boxing fight. Two currencies will always trade against each other. For example, the euro-dollar. Each trade is a simultaneous exchange, meaning when you are buying the one currency, you're automatically selling the other. A lot of people ask, why aren't more people trading Forex? And this is quite a big question. One of the reasons is because Forex is still quite new for people to be trading. After the Second World War, the world was in quite a lot of chaos, and it was clear that a new system needed to be devised in order to stabilize global economies. The Bretton Woods system agreement set the exchange rate of all currencies against gold, and this was devised shortly after the Second World War. However, economies grew at different speeds, so the rules of the system became obsolete and very limited. For example, one country's economy would be growing a lot faster than another, but the exchange rate was set, so it became almost unfair. In 1971, the Bretton Woods system was abolished and was replaced by a free-floating system devised by the United States. This effectively meant that exchange rates were now determined by supply and demand basis. This was the first time that people could actually trade Forex for profit, because they could purchase one currency, waiting for that country to get stronger and then sell it later. However, it was restricted to the elite and the very wealthy, as the smallest amount that you could actually trade would be one lot, which would be $100,000. The advent of personal computers in the 90s meant that people could now sit at home running very advanced algorithms, applying mathematical formulas in order to help us determine which direction the market is going. We also see that the banks started creating trading platforms at this time, and they started allowing us to trade smaller amounts than a full lot. So this is really the first time that people could trade Forex for profit from home. You will see that in the graph above there are two spots for Forex. This is because there are two published versions of how much Forex is traded on average per day. The larger one of 3.98 trillion is the entire global Forex market traded per day. The retail sector, which are people trading purely for profit like you and I, accounts for a much smaller amount of 1.5 trillion per day. The retail sector is still 15 times bigger than the combined weight of the three largest stock markets combined. So why is trade volume important? Liquidity. It means there is always someone out there wanting to buy your currency, and trades execute almost immediately. Also, the sheer size of the global Forex market eliminates the possibility of companies or regular people tampering with the prices. It takes almost the full weight of a government to influence the price, and even then it doesn't last for long. In stocks and other markets, there are loads of options out there, which can become quite confusing. Successful traders in those markets can require to watch 50 to 100 or more different stocks or options and analyze each one. The real professional Forex traders very rarely trade more than 5 currency pairs. I know several very successful traders who trade only from one pair, and then only 20 to 25 times a year. Now that is on the lower end of the spectrum, but it is still possible. This gives you more time to spend on your pairs and pick the right trades. It also means that once you have a good system you can feel comfortable trading, you can spend as little as an hour a day trading. It might take you 3 years to get to that level, but how many businesses can realistically say that in 3 years the business will run and you only need to work an hour a day, 5 days a week? No clearing fees or commissions, no exchange fees, no government fees, no brokerage fees. The only fee charged is a spread. The spread differs from broker to broker, but is charged upfront, and the fee is usually covered in the first 2 or 3 pips of the positive movement. Please note that some brokers advertise incredibly low spreads, and instead they are starting to charge a commission. This is relatively new, and most brokers do not do this. Unlike other markets, where contract sizes or lots are determined by the exchange, you can determine your own lot or trade volume. This allows traders to participate with small accounts or massive accounts alike. The retail transaction cost, spread, is typically less than 0.1% in normal market conditions. Large dealers might offer costs as low as 0.07% even. giving us much lower transaction costs than most other types of trading. Leverage is both your best friend and your worst enemy in Forex, and this can be a big bonus. In Forex trading, a small deposit can control a much larger amount. Leverage gives the trader the ability to make nice profits and keep total capital risk to a minimum. Leverage is given in a ratio, the two most common being 50-1 and 100-1. How the ratio works is the broker will let you trade as though you had an amount 50 or 100 times larger than what you have put down. So a $500 account could effectively trade with $50,000. There are brokers out there that will offer up to 400-1 leverage, however I don't recommend going that high. Stick with either 50-1 or 100-1. This is because while leverage can greatly increase your earnings, it can also increase your loss. Always keep in mind that Forex is a risk. Sorry to put a dampener right on there, but I want to make sure you're aware of the risk and don't go running to the bank after seeing a 400-1 leverage. We will discuss this in more detail coming up. Demo accounts are accounts offered from brokers where they give you virtual money to trade on their platforms. You are trading the real exchange rates, real indicators, and the fees and everything is built in as though it was a real account. Best of all, they're free. So if you want to try out a new system, try trading a currency pair you're not used to, you can set up a demo account and try it out. It's a fantastic way to go.